This is Steve Wolf with my monthly report. This month we'll be talking about what happened in May of 2022. It's been a lot of fun, hasn't it, folks? For the past couple of months, the stock market just really took it on the chin. It was the bear was definitely in control of what was going on in the market. Actually, though, there was a bit of a rally at the end of May, so May ended up not horribly, but there was a stretch between April and May that were pretty bad. So in May, what happened? The Dow and the S&P were basically flat for the month. Surprisingly so, but they were. The NASDAQ was down about 2.1% in May. But for year to date, the NASDAQ's down about 21%, and the Dow is down around 9%, and the S&P is down around 13%. So it's still been a rough year so far. But that streak of 8 weeks where the Dow was down was really tough between April and May. Matter of fact, that's the longest losing streak since 1932, at falling 8 consecutive weeks. There was an article from the Business Standard on May 21st, which basically said, the Dow slid as much as 617 points, down 2% on the day, and 16% year to date. Again, this is May 21st. The blue chip index was on pace to cap a weekly decline of more than 4%. Marking its 8th straight weekly drop and the longest such losing streak since 1932, according to Dow Jones market data. And that year, 1932, marked the Dow's lowest point of the Great Depression. So, obviously, not a great 8 weeks in time. Now, the S&P was down too. It was briefly into bear market territory. Bear market territory is defined as being down by at least 20%. It hit there, but then it kind of quickly recovered, so that's a good thing. Now, we've been talking about the same culprits here for quite a while. You know, we're talking about inflation, we're talking about supply chain, we're talking about interest rate worries, the war in Ukraine, you name it, we're worried about it. But really, inflation right now is head and shoulders above the others and really front and center. Gasoline prices are going through the roof. Food prices are going through the roof. Let's talk a little bit about gas prices. I have a weekly chart here of gas prices from the U.S. Energy Information Administration. And across the U.S., the average cost was up to $4.54 a gallon. Now remember, this is across the entire United States. Here in California, where I am, the average in May was at $5.87 a gallon. Now, both of those prices have gone higher so far in the last couple of days. Here we are in the first couple of days of June, but who knows where that's going to stop. Now, I just filled my tank in my 2001 Lexus convertible. Beautiful red convertible, love going out, taking a nice drive. Unfortunately, it only takes premium gasoline. And I paid $6.15 a gallon, and that was at Costco. So if you're going to places like Shell or Exxon or Marathon or something like that, I guarantee you're paying a higher price than that. So we'll see what happens, but right now gas prices are going through the roof. Let's talk about food prices for a minute. Food costs in 2020, which is just 2 years ago, for a family of 4 was about $412 a month, and this is according to an article online from GoBankingRates.com. So let's hear that again, $412 a month. That family of 4, according to the USDA, the U.S. Department of Agriculture, is paying about $916 a month now. Now, $412 to $916 is huge. Now, I'm not sure exactly we're talking about apples to apples. It may be that it's not quite that high, a double or more, but it's a lot higher than it was. Food prices and gasoline prices are just killing a lot of people. I mean, if you're one of those people, you know, who doesn't have a big salary and you're a middle class, lower class type person as far as economics is concerned, this is really hurting. And sooner or later, there will be demand destruction. When that happens, I'm not sure, but at some point, people will just say, I can't afford this, and have to figure out other ways of having a food budget and other ways of getting around. So let's talk a little bit about interest rates. The Fed is still on a path to raise interest rates. I mean, according to the futures markets, the Fed is predicted to raise by 50 basis points in June. 50 basis points is a half of 1%, and another 50 basis points in July, and some more after that. But at least that's what the futures are predicting. Now, I talked about this some time ago in one of our previous monthly reviews, and I disagreed with the government's viewpoint about inflation. I did not think it was transitory, and I feel a little bit vindicated because Janet Yellen, who's the Treasury Secretary, came out recently and said she's really gotten the inflation view wrong. And so between the Fed and the Federal Reserve, they're a little bit behind the curve, so they're playing a little bit of catch up right now. But what that means is that bonds still have a headwind against them because, as I explained, I believe it was in the last monthly report, as interest rates go up, bond prices go down. And so that's where we are right now. We'll talk a little bit about the supply chain. Now, China has basically closed down their country over the last couple of months. It's been brutal. I know that what they're saying is they're trying to stop COVID. I don't know if that will work or not, but they have basically shut it down. Now, I understand that here in the last few days, they're starting to open up a little bit, but I'll tell you, I'm still waiting for my patio furniture, which I ordered in September, and here it is in the beginning of June, and I don't know when it's going to get there. I guess I'm just going to have to get used to eating off my patio floor. At any rate, let's talk a little bit about earnings. Now, the earnings came out for the first quarter, so January, February, March here in the last month or so. And they really weren't bad, but they weren't as good as people thought, and quite honestly, things have slowed. Now remember, the stock market is a forward-looking vehicle, so a lot of the pricing of a slowing market could already be in a lot of the stocks, and quite honestly, on some of the stocks, it definitely is. I mean, some of them being down 60, 70, 80%. So, unless those companies are going out of business, those prices are in there. Now, I've got to tell you, I've got to do my normal disclaimer that what I am saying is strictly for informational purposes. And it's not meant to be a recommendation. So before you buy or sell anything related to anything I'm saying about the markets or individual securities, be sure to consult your financial advisor to ensure it's the best recommendation for your personal situation. Now, let's talk about an area that's been of strength over the last, year or two, but especially in the last year, is housing. I mean, housing prices have gone through the roof too. But I was listening to a business report this morning on TV while I was working out to keep this svelte body in shape. And I heard that the bidding that's been going on for houses, where you say, okay, I want to sell it for $200,000, and the next thing you know, somebody's coming in and saying, no, I'll give you $300,000 for it. Well, that is starting to wane. And that's a good thing. I mean, I don't think we want the price of houses to just go up forever, because what's happening is that the reason I think it's starting to slow is that you've got a little bit of demand destruction right there. The cost of the house is expensive. Mortgage rates have almost doubled. And sooner or later, people say, you know what, I think I'm going to wait a little bit and see if that house comes down in price. So I think that's what's happening there. Now, is there any good news out there? I think there is. I was reading an article by Luke Lengo. It's called There's Hyper Growth Investing. And he was saying that insider buying of stocks is at its highest level since March of 2020. And insider selling is at its lowest level since March of 2020. And we all know what happened after that March of 2020 low. The market took off. Now, I don't know whether the market's going to take off this time. Past performance doesn't guarantee future results. But I think it's a good thing. Now, there's always different sets of factors that come into play during different time frames. And what happened in the past might not happen in the future. But it's good that insiders are starting to buy their stocks. What it tells me is that the stocks have come down enough that they say, hey, I am going to put some money in here because I think it's worth much more than it is. Now, you got to know that there are many reasons that an insider will sell a stock. They may sell it because they think that the stock price is too high. They may sell it because of estate planning purposes, or they might sell it because of a stock option. There's a lot of reasons to sell, but there's only one reason that they would buy a stock, and that is that they think the stock is too low and that they think they can make a lot of money. So I think it's a good indicator. Maybe we're finally starting to reach that bottom. Maybe we hit the bottom. Don't know. We won't know until later. Some people are still saying that there's a lot more to go. Maybe there is. But it's good that I'm seeing these people starting to buy, especially on some of these really beaten down growth stocks. So we'll have to wait and see what happens with the housing market, the stock and bond market, and we'll know in time. In the meantime, I am going into surgery June 8th for my back. I've got some vertebrae that need to be moved around and fixed. And I hope that I will be back for next month's review, this month's review of May 22, next month's review of June 22. And until then, happy investing.